The next presenter this afternoon is Holly Chase. Holly is joining us from the Pennsylvania Housing Finance Agency. Holly, are you there?
I am here.
Wonderful. I am going to send controls over to you. So,
Okay, just give me a second.
yep,
Can you see it?
I can see your slides. Yep, wonderful. Thank
Okay,
you.
excellent. All right. Well, thank you so much for asking me to share some really great information about taxes. I know we're really all excited about learning about it as it is the time of year. But I just want to say that it's going to be hard to follow the past two groups of presenters because they're fantastic and great information, and I'm really happy just to be part of all of this. So we're going to talk about what teams should know about taxes. Briefly, we're going to talk who and why we need to pay taxes, three different types of taxes: transaction, ownership, and income. And then we will attack the 1040. More information than you'll ever want to know. So, what do you think of when you hear the word taxes? Just think for a second. Nothing bad will happen, I swear. Okay, are you angry? Are you upset? Are you frustrated? Are you just want to give up and tired of empty pockets? Probably all of the above. So who pays taxes? Well, we all do. People pay taxes, companies pay taxes, estates pay taxes, and trust accounts pay taxes. So people and things that aren't even people have to pay taxes. They're all over the place. So why do we pay taxes? And I think this is really important for kids to understand. Taxes are a necessary evil, if you will, but they really do help. Sort of keep our country together. Pays for education. Obviously, you guys are involved in that. Pays for roads and construction. Pays for our justice system. Pays for health care. Pays for our military. We use taxes to pay for senior citizens, and last but not least, for our protection with our police and fire departments. So really, again, does pay for some key functions that otherwise we would live in chaos, so to speak. So when I was asked to do this presentation, I was thinking to myself, what kind of taxes should I talk about? And actually came across the Monopoly game and thought I would take a little spin off of that. Monopoly game addresses income taxes, as we will hear. Also, Social Security taxes. They address Medicare taxes and also property taxes and inheritance tax, and of course the all-encompassing sales tax. So we don't have to look too far for lessons about taxes that kids can sort of understand. But I thought that was sort of a fun analogy to look at Monopoly. So let's look at the types of taxes. Okay, transaction-based taxes. Shopping, woohoo, we love that. Sales tax, but guess what? The buyer has to pay that tax. Here in Pennsylvania, we have a 6% state sales tax. Some local towns and cities actually add an additional tax to that. Sorry about that. And not everything that you buy in Pennsylvania is taxable for the sales tax. Obviously, clothing, and you can see a couple other items. And there are many more things that aren't taxable, but I thought I'd just give a taste of, again, not everything is subject to the sales tax. So let's look at ownership-based taxes. So it's tax on your stuff. So you may pay taxes on the property that you own. Certainly, if you own real estate, you will be paying an annual tax on that. Some states actually have the tax on the value of your vehicle. Luckily, in Pennsylvania, we do not. But just so you know that, or our students know that if they do go out of state, that is a possibility. So again, it's the annual assessment of what you own and payment thereof. Then you have estate taxes. So after you're gone, so to speak, you have to pay taxes on your stuff. And that includes your home, your car, the value of your life insurance, all of your investments, everything. The federal government wants sort of their share. But the good thing is that starting in 2018, you can have over $11 million of an estate without having to incur any estate taxes. And the estate taxes are very expensive. You're looking at a 40% tax rate, and again, there's a schedule that goes with that. But it's pretty important to try to shield your stuff from that estate tax after you pass on. And lastly, the inheritance tax. So it's not only the federal government taxing your stuff, it's the people who are receiving it. Here in Pennsylvania will have to pay inheritance taxes. And you can see some of the rates here. Transfers between spouses are tax-free. If you have a direct descendant, a son, daughter, siblings, and then other heirs are taxed at different rates. So again, taxes are all around us, and even when we're not here. So let's talk about the income-based taxes, because that's sort of on many people's minds right now. We have taxes. Let's talk actually about what is income. Income can be two things. It can be earned, or wages. Social Security benefits are based on earnings, as well as a pension, hobby income. Again, all of these things are earned income sources. Unearned income sources, interest, dividends, capital gains. If you have rental property, you have that rental income. If you're receiving public assistance, that would be unearned income, whether that is in a cash form or food assistance or rental assistance, things like that. And of course, scholarship can be considered income, but it is not, well, I guess it really is earned because you've done your studying. So again, the difference between earned and income, that's going to come into play with some of our calculations here. I hope I didn't scare you by saying calculations. Okay, we're going to play a little game here because not every income is subject to taxes, and we're going to talk about federal taxes for these for this exercise. So I want you to just kind of sit back and think about if you're receiving all of these different items as income. Is it taxable for federal purposes? So LIHEAP is energy assistance. Is that taxable? No. What about bribes? You are receiving one. I expect to hear people laughing right now. Oops, sorry about that. Let's try this again. And I'm not sure if you heard the buzzer, but yes, bribes are taxable. If you're receiving a military pension, that is definitely taxable. I don't know why this keeps happening here. If you have lottery winnings, is that taxable? Absolutely. What about Social Security, as I've given the answer away? That really depends. Social Security depends, the taxes depend on how much other income that you have. So it may or may not be taxable in your situation. Are our wages taxable? Absolutely. Scholarships are generally not taxable as long as it's just for the tuition and required fees. And what about debt forgiven? Absolutely. So you see these commercials where settle your debts for pennies on the dollar. And what they don't tell you in those ads is that you are going to get a 1099 for any debt over $600 that is forgiven. A 401k distribution, absolutely, because you didn't pay income taxes on when it was earned. Hobby income, we mentioned before, yes, if it's over $600. Unemployment, that is taxable as well. Cash gifts, if you are receiving a gift, is that taxable? It is not taxable. The person who is giving the gift may be taxed on the value. Our annual exclusion for 2018 is $15,000. So a person can give away $15,000 without having to report it. And this goes back, why are gifts taxable to the person giving it? Because it gets back to that estate tax. The government sees that, well, maybe you're trying to sort of get rid of money from your estate to avoid the estate tax. Life insurance proceeds, you are the beneficiary. No, absolutely not. But the value of your life insurance actually can be pulled into your estate. Child support, you are receiving it. No, that's not taxable. Prohibited self-employment activities. So perhaps you are distributing pharmaceuticals on the street corner. Again, tongue-in-cheek laughing. That actually is taxable. You know, our tax system is based on the honor system, if you will. And in the tax code, it has all different kinds of income that you wouldn't technically think are taxable, but in fact they are. The problem is how do you actually report them? Something to ponder. If you are receiving cash assistance, that is not taxable. If you are receiving veterans disability benefits, that is not taxable as well. Non-cash gifts, you are receiving it? No, it's not taxable. But again, the person who is giving the tax may have to report it. Receiving workers' compensation? No. And lastly, non-cash prizes. Yes, in fact, they are taxable. Sorry about that. I'm really having an issue here with my technology. Those are, in fact, taxable. So you remember the show Price is Right? I guess it's still on, but you had the big showcase winners. So many of those game show winners have to decline the prizes because that is seen as income. So if there's a $40,000 car and vacation, guess what? That's $40,000 of income they have to report at the end of the year. So again, taxes all around us, and if you're really curious, there are 75,000 pages of tax code that you can look into and learn more. How's that? All right, so getting back with some more of our income-based taxes, like the real stuff. We have payroll taxes, Social Security tax. Sometimes you'll see it on your pay statement as FICA, which is the Federal Insurance Contribution Act. You might see it as OASDI, Old Age, Disability, and Survivor Income taxes. 6.2%. It's a flat tax, which means everybody pays the same, and it's assessed on your wages. Now, if you are putting money into healthcare deductions or some de minimis items that for example, if you have a health club membership that's paid for by your company, the Social Security tax is not assessed on that. Everyone with earnings up to their wages up to $128,400. So anything over that, good grief, that would be wonderful to have that as a problem. You wouldn't have to pay that 6.2% tax. And paying this Social Security tax and how much you pay determines your future retirement or disability benefits. Then Medicare is actually a separate tax, and sometimes employers will sort of chunk those two together. 1.45%. It's a flat tax on your wages. It's assessed on everyone with no earnings limit. So it doesn't matter if you're making over that 128,000. You still have to pay the Medicare tax. And again, it's not assessed on healthcare deductions or the de minimis items that you may be receiving from your employer. And that pays for current Medicare recipients, so retirees who are receiving medical benefits. It helps pay for that. These are kind of boring taxes, but we have to go through them anyway. And there's state and local taxes. Again, these are income taxes. So in Pennsylvania, we have a flat tax, 3.07%. It's assessed on all income. Employers withhold it from our wages, and there are very few deductions or adjustments that we can make to that. There are a couple that I won't go into, but not too many. Tax forgiveness for low-income filers, so that is a good thing as well. But it's 3.7%, 07%. Then there's a local tax. Again, it's based on your wages, not on all income as in the state tax. And it really depends on where you live and where you work and how much you're paying. So you can see some of our examples here. Some of the smaller towns, might be 1%, 1.5%, but it just depends on where you work and where you live. And again, your employers withhold these taxes from your wages. Now we're going to get to the fun part. We are going to get to federal tax. And if someone, I want to ask a question, if you could use the raise your hand. How many people actually know what the progressive tax system is? We have any answers on that?
I see two hands, Holly.
Okay, that's great.
Isn't it great? It's anonymous. I won't say whose two hands I see.
No, that's fine. That's a good thing because that means this is the way our system is based, and so many people don't understand it because it's not. Okay, let's be real. People don't want to understand taxes because they're taxes. It's not a great topic to be in learning about anyway. So the progressive tax means that the more money you earn, the higher the rate, which makes some sense. The more money you earn, the higher the rate that you're paying. Okay, so we're going to take an example here of a taxpayer. Well, first of all, let's look at the tiers. Now, these are the current tiers 10, 12, 22, and 24% for 2018. And you are taxed in tiers. Now, these numbers here, the 0 through 10, these are just simplified for our example. So, again, this is just an example. Don't use this to actually calculate your own taxes, please. All right, so here you're making 10,000, you're in the 10% tax bracket, 80,000, you're in the 22%, 24. So if I'm making $25,000 of taxable income, that is my taxable income. That puts me in where the 12% tax bracket. I would expect to pay $3,000 of income tax. Taxpayer number 2, making $50,000, that puts that person in the 22% tax bracket. 22% of $50,000 is $11,000 in the income tax. And then our third example is $85,000 of taxable income, which puts that person in the 24%, which you would expect them to pay $20,400. But that's really not how the system works. And we're going to look at the next page. This is how it works. This is how the progressive tax calculation works. So, as we said before, the first $10,000 of income is taxed at 10%. Great. The amount between $10,000 and $40,000 is taxed at 12%. The amount between $40,000 and $80,000 is taxed at 22%. And the last part of our example, from 80 to 100, is 24%. Okay, so let's see what that really means to somebody who has $25,000 in taxable income. So the first $10,000 is taxed at 10%. That's $1,000. And then the next 15 falls into that 12% tax bracket is $1,800. So in total, they're only paying $2,800, not $3,000 like we were expecting. So that puts them, their real rate is 11.2%. Let's go to the guy making $50,000. Again, first $10,000 is taxed at 10%. And then the next 30, which, oh my goodness, I think I have the wrong calculation there. 30,000, sorry about that, 30,000 with 3,600 brings us to a total tax of 22. Gracious, I just screwed that up. Okay, yeah. So the next 30,000 is taxed at 12%, which gives us 3,600, and then the final 10,000 is taxed at 22%. So in total, that person making 50,000 is paying 6,800, which brings their real rate to 13.6%. Okay, last but not least, let's see if we can get this right. First 10,000 of the guy making 85,000 is taxed at the same rate. The next 30,000 is taxed at the same 12% rate. And then last but not least, 40,000, the next 40,000 is taxed at 22%. And then the final 5,000 is taxed at the 24% rate. So all in total, you have $14,600 in taxes. They're really paying 17.2%. That's what progressive means. So really, it tries to make the first 10,000 of everyone's income is taxed the same way, and so on and so forth. This is a fair system, at least we think. So one thing I want to point out is certainly with the tax conversations going on about, I'm in the 22% tax bracket or I'm in the 24% tax bracket. When you break down your own taxable income according to this, you're not paying that amount of your marginal rate or the last dollar that you made that rate. So, maybe hopefully this will make you feel a little bit better that we're really not paying as many taxes as we think. Let's hope. Now let's attack that 1040 form because that is a mess. How many people can understand these forms? Aren't they complicated? They're terrible. They're our government. That was Holly Chase talking about PHFA. Okay, so we have different forms. 1040 is sort of the year-end reconciliation or resolution. So we have the 1040 EZ form, which is for a single filer, or you may be joint, but you can have dependents. You have very limited types of income. So you can see here wages, interest, and unemployment. You can also, we're going to talk about this a little bit later, but you can also claim the earned income tax credit with the 1040 EZ form. And it really is pretty easy. 1040A gets a little more complicated. So it has all this information that the 1040 EZ has. Plus, you can claim dependents, you can claim retirement income, many more, again, many other sources of income. You can have adjustments to your income. There are deductions, credits that you can take. So it gets a little more complicated as your situation is more complex. The 1040 itself is called the long form. So all of these things from the EZ and the A are included in the 1040 long form, but you can also report business income. You can report your self-employment income. You can also itemize your deductions, and we'll talk all about this a little bit later. But I just want you to know that there are 3 different forms, and the one that you use is dependent upon the complexity of your income. So I guess it's a good thing if you have a lot of income and it's complex, you have to fill out the long form. It's probably a good thing. One of the things that's really important to identify or sort of understand is your filing status, which really is your family status. And it determines the tax tiers that we mentioned before and sets the standard deduction. You can file single, married filing jointly, married filing separately, or as a widow or head of household. So how does this all work? I'm actually going to fast forward because we are running out of time, but this is the process of filing, calculating your income, and calculating your taxes. So we're going to start first with total income. Total income is from every source that's taxable. You subtract your adjustments. Now the government says, if you spend your money on a few different things, you can take that off of your income. So here are the examples of adjustments. Then you can subtract deductions, which the government establishes a standard deduction for everyone based on your filing status, or if you have other certain expenses, you can take the greater of those two. So that'll give you your taxable income. That's terrific. Taxable income over total income times 100%. I want you all to actually calculate that at home. Taxable income over total income. That's the percentage of your income that's actually subject to tax. It's kind of cool to figure out, hey, you've got some, income. Not all of it is subject to tax. So that's a kind of a nice number to analyze. Once you have that taxable income, you figure out your tax by the tax tables. You're going to subtract credits. Credits are a dollar for dollar reduction of the tax that you owe. You can see some examples there. But you may have other taxes that need to be added back in. For example, if you're paying a healthcare penalty because you don't have insurance, there are self-employment taxes, and some credits are due to repayment. You have to add those back in. So that gives you your total tax. Woohoo! There we go. Now, once you have your total tax, you have to figure out how much you've actually paid into the system. You've had withholding from your earnings. Plus are these things called refundable credits. It depends on, what the earned income tax credit is one of these refundable credits, which means if you don't have a taxable, no tax at all, you still get that money back because it acts as if you paid into the system. Taking that gives our net result. So if that number, the total tax minus withholding and refundable credits, if that is a positive number, it means you didn't pay enough through the year. You have to write the IRS a check, and of course, if that number is a negative number, you've paid more in than you needed to. So you can get a refund of that back. Two more slides, and then we're done here. I want you to also look at, with your own taxes, how much money you're having withheld, minus your total tax, if you are getting a refund. Divide that by the number of pay periods you have in a year. That gives you the dollars that are being withheld, the extra dollars that are being withheld that you really don't need to have that withheld. So how do we make adjustments to that? Well, that's where the W-4 comes in, and that is again another very complicated form, but it allows us to tell our employer how much money to withhold so that at the end of the year we don't have a refund or we don't owe any taxes. We have that money in our pay now versus waiting till the end of the year. So I know they've just become available, the new ones on the IRS website. They're also working on a calculator which helps you actually fill out this convoluted form. It's 3 pages long. I just gave the abbreviated version here. But I encourage you to actually visit that once the calculator is completed. When they have the new tax regs included in that, and check the way your withholding allowances are versus what you're doing at this point in time. Okay, we're done. That was way too much about taxes, way more than you'd ever want to know. And I do have the handout, and Hillary will make sure that's available. It doesn't have some of the photos in, but it just has all of the information. So if you want to go back and review any of this, feel free. If you have any questions as well, please feel free to give me a call, or here's my contact information.
Thank you so much, Holly. That was great. Lots of information, and I loved the flow of some of your visuals. I think some of our teachers, especially at the high school level, maybe could borrow, or I know you know my case method, the copy and steal everything, right?
Absolutely. I will, if you want, I can actually send the entire PowerPoint as it stands, and take it and run with it.
Awesome. So anybody that would like to borrow from those slides, you have Holly's email and contact information. I would encourage you to reach out to her and see if you can maybe repurpose any of those in your own classroom. So I didn't see any questions. I did see a couple of comments, and Holly, I'll pass some of those on to you separately, but one comment: taxes are a great topic to teach about. Business folks and accountants try to scare us or make us think they're too hard to learn, and trick us into thinking that we need them. So I think this is definitely something that a lot of high schoolers can grasp the basics of and save themselves a lot of money down the road by making sure that they understand that this is something they can do on their own. So thanks so much, Holly. I appreciate you being with us and sharing information with us this afternoon.